is going to speak to us about quite a hard-hitting subject. It's a subject that I've spoken to quite a lot of clients about recently, and also our sister company, the Directors Helpline, have spoken to quite a few clients recently about this subject. So we're going to go with, don't let VAT be the death trap in your business. So I will hand over to you, Ian, the expert. Welcome back, everybody, to I think this is the fourth podcast that Ian has done for us, if I remember rightly. So Ian is one of our panel experts around accountancy. He's the director of MBS. MBS help business owners not only with the accountancy side of the business, but also become a bit of a financial director, don't you? And help them move the businesses forward, scale up, exit strategies, forward planning. So and the reason that Ian can do that is because he builds a really strong relationship with his clients and doesn't just sit back and do their accounts. So today, Ian is going to speak to us about quite a hard-hitting subject. It's a subject that I've spoken to quite a lot of clients about recently, and also our sister company, the Directors Helpline, have spoken to quite a few clients recently about this subject. So we're going to go with, don't let VAT be the death trap in your business. So I will hand over to you, Ian, the expert.
Thanks. So yes, it's good to be here, and I suppose it's not good to hear that you're getting lots of challenges around with clients with VAT, particularly as it's something that actually you should be able to plan for.
Okay.
Going to headline it first of all and go, VAT is the only tax that is automatically criminal for not paying it.
Okay.
It's just that HMRC choose to pursue most of the cases through the civil courts. And the reason being is that all businesses are effectively acting as an agent. You're collecting up VAT on behalf of the government, and then you should be handing it over.
Yeah, and I think that's a really important point to hone in on, the fact that this actually isn't your money to spend. It is the government's money. And obviously not everybody has to be VAT registered. Is it 85,000? Is the threshold. But yeah, I think that's a really important point, because I think some people do think that the VAT is their money, and actually what you've just explained, it's not your money, so you shouldn't actually be spending it at all.
No. I think there's some underlying principles. First of all, if you're just having your accounts, first of all, being very reactionary to go, right, that's the quarter end for VAT, now let's consider how much VAT we owe. To do a whole quarter's worth of bookkeeping and VAT analysis takes a good chunk of time.
Yeah.
You're therefore not going to know how much VAT you owe until days before you're due to pay it. So if you haven't had some degree of forward planning, you're always going to be playing catch up, and you're always going to be the case that you have the risk that you don't have the funds available.
Yeah.
So first thing first is have a method where bookkeeping is being done regularly. Okay. Ideally daily, but I think weekly can suffice. Monthly, but you're still having the same issue. You try and put a month's worth of VAT aside in one big go is a big challenge.
Yeah.
So getting something that's done regularly on some kind of accounting platform that you can regularly check in of how much VAT you owe, and then using another bank account, or even in a lot of the challenger banks, like there's multiple ones around, like Monzo, Starling, to name a few. Most of these have got what they call like pots or spaces. Yeah. Having one of those set up for VAT and regularly moving money into that is just a no-brainer.
Absolutely. I've got a friend who's self-employed, a sole trader, and that's exactly what they do. So all their invoices get paid into Monzo, and then they have a separate little pot in Monzo, and they take their what would be tax and national insurance and put it in that pot, so they know what to spend and what not to spend. And obviously it's really tempting, isn't it, when an invoice comes in with the VAT, or if you're self-employed and you're like, oh, I'll do it later. But the do it later attitude, as you probably know, and I definitely know from speaking to clients and from TDH, is it never ends well, does it? Because with the greatest intention, nobody ever does it.
No, it just the amount of people who get themselves into that challenge because they're like, oh yeah, no, we'll be fine. There's more money coming in. There's this big customer who hasn't paid, and so on. Yeah. It can be a big big gamble and risk in the business that you don't need to take.
Yeah.
But there's some fundamental principles though from this first point, that actually at the point you became VAT registered, what actually happened at that point? Did you actually raise prices by 20%, to have that added on, or did you try and absorb it? Because actually, if you tried to absorb it, actually you've probably depleted your margin slightly. So you're thinking that VAT registration was a bad thing, but actually it was the pricing model that you probably had because of VAT, because you were, I suppose you were more concerned about the effect that might have on customers and how the relationship with you might work. So understanding quite how that VAT add-on is gonna affect clients. Because ultimately, if they're a VAT registered business themselves, they're just going to recover that VAT against their VAT bill. So actually, the price for them didn't really go up. Yes, the cash flow element did, but they're getting the VAT back anyway. So understanding exactly how VAT works and who your customers are is really, really key. And then I think that ultimately having this sort of provisioning type method where you're putting the money aside, even at the absolute worst case scenario, you put 20%, every time you receive income, you put 20% aside. You'll always be in the case that you've got spare money and that you can then take some back out when it comes to the VAT time and make sure that you've got secret put aside. In the ideal world, though, it's on an accounting platform and you can go and check in regularly and put the actual amount you need to put aside there, because what you're not then doing is starving the business of cash flow because you've put it in a VAT provisioning account. But I don't know, if you're a product-based business, you're never going to pay all of your income across in VAT, because you've got products that you're purchasing that likely have VAT on them, and that's going to reduce how much you owe. So it's probably a really, really good time to sit down and have a chat with your accountant and just understand and go, what is this going to mean? This is a substantial change in my business. It's probably as big. Yeah, it's probably one of the biggest changes that will happen alongside employing somebody for the first time. It's one of the big major challenges. You're now responsible for something that isn't really yours.
Yeah.
Like I say, we've got taxes and things like that, but because they come so much later and because they're usually only ever a civil case, it's not. Yeah, and there's time to pay often. If you do it early, you've got 9 or 10 months. VAT, with the best will in the world, you're probably only going to get 2 weeks notice of the actual final amount you're going to owe. So you need to be in advance putting that aside, working on it, making sure that it's there, and provisioning is definitely one of those best methods.
And what would you do? So say one of your clients came to you, and obviously, I mean, you're going to be advising them throughout the process, but say, it's a client that potentially you've only been working with for sort of half a quarter or, 1 quarter, and it comes to VAT time and they haven't got the funds available. What advice as their accountant would you give them?
Yeah, so first things first is checking the overall cash flow of the business, just to make sure to go, is this really a VAT issue? And it was, I don't know, they spent the money because they thought there was additional available, or actually have they run a very tight ship and somehow this isn't a viable business? So we need to understand if there's something to work with that we can move forward with.
Yeah.
From there, first step is give HMRC a call, explain the circumstances, explain what's going on, because actually there might be the possibility of having some degree of time to pay arrangement or something where you can avoid surcharges potentially. Maybe it'll just be interest charges on top. Not quite as drastic then as potentially going out and getting a loan or finance of some description, which ultimately, I think as soon as you mention it's to pay a VAT bill, the interest rate's probably going to go through the roof anyway, because that lender's already going to know this is through poor cash management, potentially. So what's our chances of getting paid? Probably relatively slim. So they're certainly going to raise the risk profile and therefore raise the interest rates they're going to be charging. That doesn't mean to say that's not an option, but I think before we go down that option, it would be considering to go, is the business viable? Have we spoken to HMRC? And then just a bit of a costs review. That actually, if cash flow really was that tight and it wasn't that the business owner thought there was suddenly a load of spare cash and they could pay themselves, actually it's just go through the last month or 3 months maybe of bank statements and just highlight everything. We tend to go with green, that it's essential for a business So you can't really operate without it.
Mm-hmm.
And we go for red if it was, do you know what? That's a bit of a luxury.
Yeah.
So, for example, in our business, we pay for Office 365, but we also pay for Zoom. And we think that Zoom is a more stable platform than using Microsoft Teams. It tends to be more reliable.
Yeah.
But if it came down to the crunch of it, we could go, do you know what? We could cancel Zoom and we could just stick with Office 365.
Yeah.
So it's being aware of those, so you could make that decision and go, do you know what? That thing is an add-on luxury. I can always remove that if I suddenly need to improve cash flow. Because I think the default that most business owners go to is, that's fine, I'll just sell more. But in order to sell more, you've got to go and find more customers. There's time involved, there's costs involved. If we choose today to cancel Zoom, and I don't know what Zoom's costing us, but let's say a few £100 a month. If we suddenly just go, right, we're going to cancel Zoom, we save that money from next month. So it's immediate. So it's being aware of the cash flow that you've actually got going on in the business, because it probably wasn't the VAT that caused the issue. The VAT is the symptom. But the underlying cause was probably some degree of poor cash management or poor provisioning or poor forecasting in the first place.
Yeah, and I think that probably leads quite nicely on to the next podcast that we're going to be recording, which is about having a strong relationship with your accountants. Because if you have that strong relationship in place, you can do your cash flow forecast together and understand what's coming in and out the business, and also you can help your clients prioritize what is an essential. And like, I absolutely hate Teams, so I'd be like, I need to keep Zoom. But when you put it like that, and we're paying for Office 365 and it's included, it kind of makes sense. But sometimes you need somebody to lay those changes out to you, and it might only be a small change, but if you had 5 small changes that saved you £200 a month, that could then go towards the VAT. So I think the next podcast that we're going to record will follow on nicely. If you do want to speak to Ian further about VAT and how to manage that, you can find Ian on the directorschoice.com platform under the accountancy sector, or obviously he's on LinkedIn as well, and you can go straight to their website. So thank you so much, Ian, very informative as always, and I look forward to recording the next one with you.
Thank you, Sam. It's been a pleasure.
Thank you.